Hey guys, Council Glenn with Bridging the Gap, where we talk about bridging the generational gap as well as the wealth gap. We literally take you step by step and tell you how to bridge that gap from where you are to where you want to be from the aspect of a boomer, somebody that's been there, done that in the Xer. Hope you guys enjoyed the content. Make sure you subscribe to our channel and make sure you hit the bell notification. We want to let you know as soon as we drop something, we want you guys to get it, want you to be first. So make sure you do those two things for us, and we can't wait to drop some more content. Good morning, good afternoon, good evening, whatever time it is, wherever you're watching. Welcome to Bridging the Gap, episode 16.
That's it, man.
I'm your host, Council Glenn.
And William V. Thompson.
Back at you again with some more hot fire. Speaking of hot fire, I'm drinking some coffee from an unlisted source. Now, if this unlisted source would like to sponsor Bridging the Gap, I'll be happy to keep it in this original cup. For sponsorship opportunities, please contact us. No, I'm joking. How you been, man?
Have been doing really good. Still busy, still doing that tax thing that we're going to talk about some on today. So is this taxes, and more taxes? Because that's where the money is.
Yeah, I don't think people realize how much money is actually in taxes, but hopefully today we'll break some of that down.
And I'm going to make a general statement, Council. Studies have shown that 30% of what a person makes goes toward taxes. So if a person's making $100,000 a year, they're ultimately spending $30,000 in taxes, more than their house, more than their car, and more than those ugly student loans, and sometimes all added together.
Wow. I can't wait to dive into this one. This is probably going to be one of my favorite ones we've done in a while. When it comes to taxes with the business, I mean, of course, we can get pretty wild with deductions and things like that, but let's go step by step and hop into it. What do you think the first step is, or your point in taxes with the business?
Okay. Well, I tell you a general idea, then more specific. If a person really wants to build wealth and not have the IRS take a lot of their money, you need to have a business, number one.
Okay.
Because when Congress developed the laws, they said we need someone that can help us stimulate the economy. So all the great deductions are on the business side of the table. That's the general first thought, okay? But then even once you decide to become a business, the key thing now is selecting the right business entity. That's the key thing.
All right. Now, when you say business entity, what if I'm just getting like paid via Cash App or, people paying me cash and I just putting it straight in my personal account and, we handle it at the end of the year.
Okay.
Is that kind of the way you would recommend? Or
well, again, let's backtrack. The first thing people can do, it doesn't matter whether I'm talking about a business making $5,000 a year or $50 million a year. You really want to have the same mentality that I literally want to make a lot of money, but legally minimize my amount of taxes. Like, for example, a lot of people will actually look at starting a business, and it's very popular now to become an LLC. Okay. And people feel like they've arrived. Well, an LLC is really more so for liability protection than it is for taxes. So once you decide you want to be an LLC, and we recommend it, then you have to answer the question, what is your tax election? Okay. And the tax election simply says, listen to this, how do you want to be taxed? Now think about it. Most people, when it comes to financial matters, don't have a lot of say in it. But now the government is saying, tell me how you want to be taxed. What set of rules do you want to work under, live under, and be taxed at?
Wow. So there's different sets of rules I can select to be taxed at as a business owner.
There you go.
Wow.
So it's smart to know what the better rules are. Meaning, if you do nothing, you default to be what's called a sole proprietorship. And it does have some advantages and disadvantages. Or you could say, I want to be treated like a partnership, or I want to be treated as an S Corp or a C Corp.
Got it.
But it's key that you have to make the right decisions. And let me give you a couple examples. Joe and I, for the last 20 years, we have been a C Corp.
Okay.
And the reason why a C Corp works for us is because we per se really did not need the salary because of other streams of income. We wanted the tax-free benefits. So our goal was, we'll take a salary, but we want to build benefits. So a C Corp made more sense to us because in a C Corp, I can take a small salary like $24,000 a year, but then I can turn around and I can put 24,000 into my 401k. All that's tax deferred. Then I can have my long-term health care paid for. I can rent out my house for board meetings. My travel out of the city is tax deductible. My life insurance, my health insurance. Joe Vittori can have a scholarship given by Your Promised Land, our corporate entity. So all the benefits that I needed and wanted, a C Corp made more sense.
Got it.
So individuals have to sit down with a tax professional and they have to answer the question, what's more needed? Do you need a big salary now? Small salary now? Do you want a lot of benefits? Tell us what you need. What's your goal with this company? And then from there, we can decide whether it's an S Corp, a C Corp, a sole proprietorship, or maybe a partnership. But that's the key thing if you're going to maximize your tax savings. Okay.
And that's what I think is so important. A lot of times, especially on social media these days, everybody's a tax expert, and we see, start an LLC, get your business credit, kind of the same post being shared over and over again. But like you said, you guys do a C Corp, but I personally did an S Corp, and that's because we were trying to buy a house. So
there you
we
go.
needed to show a larger salary.
Yeah.
My situation was different from yours, and everybody else's situation is different than your other friends and family or whoever on Facebook. So it's important to talk to an expert.
That's it.
About which business tax election, you should select when it comes to that business entity. Like you said, the LLC, that's just for protection. That tells the IRS nothing about how you're taxed. And again, by default, it'll be a sole proprietorship. But you need to understand the rules with all four of those when you're making that selection.
You have to. And going back to what you said, an S Corpus, we sat down and talked and asked you general questions. It made a lot more sense to you guys. And you guys are doing it now. You guys got these huge salaries now.
No.
And it positions you all to be able to get out in the marketplace and do some things that you want to. You're not as concerned about retirement in a 401k because a lot of your retirement wealth is going to primarily be through real estate.
Correct.
So you in turn wanted that money now so you could do real estate outside of your S Corp to build wealth that way. So again, like you said before, talk to the professionals. And I tell people this, I always use this saying, I heard it years ago, that you never study to teach, you study to live and simply teach what you live.
Mm-hmm.
Go to somebody who is doing, not thinking about doing what you want to do, because when we do that, we simply can show you our tax returns if necessary, and our real estate portfolio and our various things. So you can now know we're not thinking theoretically, but I want to get this thing right. Why? Because my family is doing what your family is being recommended to do. And trust me, it comes across so much better in your results.
Yeah, I agree 100%. 100%. One of my best friends, David, his mom always used this saying, the best lesson is a bought lesson.
Yeah, and good wisdom. Good wisdom.
If somebody else has already paid the price, there's no need for you to do the same thing again. Just learn from history, man.
That's it. And and if I'm going into a professional, I'm going to ask them, are you doing successfully what you're telling me to do? Okay, you're telling me you want me to get a six-pack, and that's the thing. He can tell you how to get a six-pack. I want to know. I don't go around looking at men, but I want to see your six-pack. If you got a six-pack, you can probably tell me how to maybe get a three-pack at my age, but more than what I got now. But show me that you're doing it and doing it well, and I will listen.
Yeah, this generation knows what it's called receipts.
You got it. I'll see. He took the word. I knew that. Good stuff, man. Good stuff.
All right, what's the second point in cutting tail with the business?
With the business, I tell you, it's so simple, concept, but here it is. Learn, note the word learn, learn to look at every way you spend money and develop a legal way to make it tax deductible. I get teed off to hear tax professionals saying, go out and incur debt to get a deduction. Oh, no, that makes no sense. I go out, I'd incur debt, and I incur $10,000 a year worth of interest. I might save $3,000, but I spent $10,000. So our philosophy, look at every way you spend money, and let's make it tax deductible. For example, your oldest son is 8?
Yep.
8. See, right now, within time, you all can start employing him. He can get a W-2. You get a tax deduction. So what his allowance used to take, or if there's an allowance, his salary now does.
Yep.
The same thing with people with their home offices. See, if you're a sole proprietorship, you can simply write off a part of your home office. So if your house is, let's say, 3,000 square feet, at least make 1,000 of it a home office. And now 1/3 of all your household expenses are now tax deductible. You pay no more, but you probably got another $5,000 or $6,000 write-off. That's for sole proprietor. But in a C corp, I can't do that way. Again, different law. At a C corp, what I have done, what Joe and I chose to do, is we simply have monthly meetings at our house. And, got a pretty decent house. And my point of that, we went out to Grandover, and Grandover says they're going to charge me $1,500 to rent about an 800 square foot room, to have food brought in for all day. That's about $1,500. So in a C corp, what I do is when Joe and I have our monthly all day meeting, we take our breaks sometimes too. We take our breaks. He's laughing. I winked at him because I'm married, but that's a whole nother thing. We're doing money, not marriage today. But we then can get our corporation to pay us $1,500 a month. The corporation gets a deduction for $1,500. Joe and I get that money, which is $18,000 a year.
Tax free.
I tell you, the young fella got it going on. That's tax free because we've rented it less than 14 days. And I think it's based on IRS code 280. That's $18,000 of tax-free money we got. We spent 12 days a year at home working on business, and the corporation got a tax deduction.
Wow. So that $24,000 salary you mentioned earlier now just went up
to 42, man. Yeah. You got it.
Yeah.
See, and that's why the bridging the gap is so important, because see, Counciel, being a millennial, understands the moving parts of the world better than I do. And with my long experience of working, I may know one or two things he doesn't. And guys, when we put that thing together, that's why our podcast is so different and unique. Man, we're putting old school, new school together, and it's creating a wealth building opportunity for anybody who will heed and listen.
Agreed, 100%, 100%. And that's why it's so important to talk to people who are doing it, man, and not just, going by what you see somebody post on social media.
God knows that's true.
What you see on YouTube. Talk with someone. Not that YouTube can't be beneficial, because it definitely can. But it's so important to talk to somebody that's doing it.
You got it. I got a question, a little bit off the subject. It appears that on social media that it's almost the gospel. If you see it on social media, you can run with it. Is that pretty much the general premise, or a little different now?
I think some people may feel that way.
Yeah.
And the problem, one of the issues with social media is it kind of legitimizes things because you see it or hear it so much.
Man, okay. Yeah.
I don't watch the news very much.
Okay.
My mom watches every day.
Yeah.
What I see as far as news,
is
if it don't pop up as an alert, I see it on my timeline.
I got you.
And so people take it as gospel because that's all of the input that they receive.
Okay, good point.
And that's why it weighs or has so much weight to it, because it's the only source.
I got you.
Social media of where they get news, financial matters, and with social media, it gives everyone a platform, and sometimes people don't always use it the best. If that makes sense.
It does.
So
it does.
You see a bunch of highlight reels from everyone, and so you begin to think that that's how life is.
I got you on that one. Yeah.
Nobody sees the struggles anymore. We just see the highlights.
Yeah.
And that's unfortunate.
You're right. Now, and I know that there's a principle in the Bible that stands out. It says something like that: a simpleton believes everything he's told, but a wise man researches to see if it's really true. And I think, and I love social media because you get a lot of insights there, but particularly with financial matters, as Counciel has said, once you hear something 3 or 4 times, just research to verify it. And once it's verified, run with it then.
Yep.
Run with it then.
And this, I'm gonna stay on the sidebar because I asked you about this earlier this week, and it's something that's really popular on social media right now. Cryptocurrency.
Oh yeah.
And now everybody is, to the moon, and Dogecoin and all these other ones. And people are literally just from seeing what other people post, making stock investments
Yeah. Yeah.
without necessarily understanding everything about it. I'm not an advocate or against uh, you guys or anyone investing in cryptocurrency, but a lot of people do it just based on what somebody else.
I got you.
You know, I gained $5,000 today. My stocks are up this much. Oh, let me go buy it just
Yeah.
because so and so's winning. But they don't really understand how it works, the ins and
Yeah.
outs, where you buy it from, what platform allows it, what doesn't. They haven't done the research, but based on what somebody's posting on social media,
Yeah. You're right.
they're running with it.
You're right. And I think last week, a week before, I think Coinbase, I think it's
Mm-hmm.
called, went public, 300 and some change. And people are saying that it can be the next Amazon, Microsoft, et cetera, Facebook. And the potential is there. But you said it important. If you're going to build wealth, you definitely want to seize opportunities like that. But again, as we said before, in all you're getting, get understanding. And there's something else I look at. There's always a publication of the 50 most disruptive companies,
Mm-hmm.
and it's been there for the last 3 years. So I really do believe there's a lot of legitimacy to it. But I want people, particularly people of color, to seize those opportunities, research, and understand why you are investing your money. Because the average person, if they put $3,000 into cryptocurrency or something and it's gone, that's probably a month of somebody's life.
Yeah.
So understand it before you undertake it. That's what we're saying.
Agreed. Agreed. All right. Step 3 in cutting taxes or TED with a business.
Very simple. This is our final one. Very simple. Make sure you document what you do.
Okay.
Because when you go from maybe making 100,000 to 1 million, the IRS knows that from the standpoint of you filing a tax return.
Mm-hmm.
And one day the tax man's going to come knocking. And I tell people this, and it sounds funny. I think everybody should be audited once. You're probably thinking, what is wrong with that fool? Because once you're audited once, it shows you the importance of documentation.
Mm-hmm.
I mean, I get audited about every 3 or 4 years and, don't end up paying any extra. But I remember, I don't know, about 10 years ago, I took a $20,000 seminar up in Albany, New York.
Mm-hmm.
And of course, I took it off my taxes. And the auditor, she could not believe, why would you spend $20,000 on a seminar? That is just impossible. Because again, she's making $40,000 a year, And I said, ma'am, look at the numbers. I said, I spent $20,000. The next year I made $150,000 because of this $20,000 investment. Well, how can you? And it took me and it wasn't the law that we were debating about. Her reality says $20,000, that's half of what I make. You can't do that. So even though the receipt was there, the credit card statement was there, it was a reality thing. So the point is, document.
Yes.
Because as you begin to build your wealth and it's coming in, and cryptocurrency is a big one. This is the first year on the tax return that here's the question: have you done any type of virtual currency? If so, check yes or no. They are setting people up because right now, a lot of that has not been reported via the financial institutions.
Mm-hmm.
And and some people may check it, yep, to show their fancy. Well, I think the IRS is going to be flagging you to see if you're reporting anything because they know that most of the cryptocurrency has gone up. And for you to say yes, and they don't see something on your return because you didn't get something from the platform, their IRS is going to come knocking because that's taxable income, but nobody talks about that.
Yeah, that's another side effect or sort of understanding what you undertake. Man, that's key. So documentation. Have you always been wanting to document everything?
Well, I tell you, I have just because of profession.
Okay.
I'm a
Yeah,
retired
yeah.
CPA. And again, my first job was that of an auditor. So I'm going in and looking if people have documentation and to see sometimes how poorly corporations and, I dealt with Wells Fargo. That was one of my clients. And to see, and even as a bank, they were missing some pieces, A quick story. I remember an old company called RJR and Nabisco, over in Reynolds, RJ Reynolds.
Yeah.
Okay. I remember auditing them and I found a $500,000 mistake.
Wow.
I was like, man, I'm the man. Woo, I found a $500,000. I took it to my supervisor because it hadn't been documented right. He says, that's immaterial. He said, don't worry about immaterial because they were a multi-billion-dollar company. So a $500,000 adjustment don't even worry about it. So the point is, I learned early that even sometimes large corporations are sloppy,
Yep.
but it's important that we keep our stuff tight, because if you start making a lot of money, there's going to be scrutiny, and there's nothing wrong with that. But again, I say, I think everybody should be audited once to really get the feel of what the IRS is looking for inside out, and it will make you a better record keeping. And I think you'll grow your company better.
Agreed. I wasn't the best at record keeping initially, and have since hired someone to
Yeah.
kind of reconcile my books for me. But it's still important that I check behind them
There you go,
and
brother.
I understand what's going on.
There you go.
And ask the right questions so that I can position myself and my company is in my family really as best as possible. Even though somebody else is kind of checking that box for me, I still want to be on top of things as well. So that's something that I actually take pride in, kind of
Great.
knowing what's going on, asking the right questions, or if I see something that's missing, actually reviewing what he sends me and
There
not
you
just
go.
writing the check.
That's right. There you go.
Those things are very important.
They're critical, because so many people do what you used to do, but you need to understand your numbers to grow your business. And even when you're sitting down looking at potential partnership with someone and or funding, for you to go in there as the business owner and articulate the trends, articulate the ratios in your company, automatically that gives you a heads up, because they say this young man understands his business. He understands where he's been, where he is, and where it's going. And I can already tell you that will allow whatever you're trying to borrow for that minute, it will increase it, because why? You understand the numbers.
Agree. KPIs, that's something we'll teach on a later
All
lesson. But
right.
just knowing how, it's so important, man. If you know
It
what,
is.
how many cars you need to watch to, make $1,000.
Yeah.
All right, I want to make 3,000 this month. Okay, let me multiply that times 3.
You got it, brother.
If I know how many calls I need to make to get a deal on the contract, how many deals I want to make this month. That's
true.
how many calls I need to make. So it's important to kind of be able to predict to some degree what you can do as your business. So
You're right. Because I've learned, and I'll close with this: numbers never lie.
Nope.
No, it's just like I always use the example. If you've never met me and I told you I was 5 foot tall with blood pressure 180 over 200, and I had a 42-inch waist, and I gave you other numbers about me, you could tell whether or not I'm healthy or unhealthy.
Yep.
And the same thing about a business. Without even knowing the business you're in, we can look at the numbers and tell you whether this business is healthy or not. And one key factor is going to go down to this: what is your cash flow? And that's why we say cash flow is the rocket fuel to build wealth.
Yes, sir. We're going to wrap up episode 16, man. Cutting Ted with the business. So much information in this, my man. If you have any questions about it, write it in the comments. We'll definitely come back and answer them. But I think this is one of the keys to taking you from a side hustle to a legitimate company.
That's right.
It's understanding this piece of the business, which is something that people don't work on every day. They work on the business. This is actually working. I'm sorry, they work in the business. This is working on the business, understanding taxes. So with that being said, I'm your host, Council Glenn.
Hey, William V. Thompson.
We'll see you guys on episode 17.
Great.